All right. Good morning, everyone. I hope you had a great evening. Good morning so far. That you're ready to for another great day in the market. Another new all-time high, maybe not. We'll see. Um, all right, where to start? So I shared some stuff last night, and I don't want to sound uh, negative or anything like that. I just want to bring some situational awareness so that you guys don't get caught uh, in an extended market, taking too much exposure while the market is not at its best risk reward. And yeah, that's my only goal, right? So I know it sucks a market in lockout, um, but you have to be careful, right? So the worst thing that you want to do is having FOMO, chasing that market, and then all of a sudden the market is extremely extended. Just have a normal shakeout stress test to remove that excess, and by swing trading you have uh, smaller stop loss that just stop you out of everything, and the market just resume higher after that. So that's why I like to engage close to the 21 EMA. It just bring you into a spot where risk reward is optimal. So easier said than done when this market just gap up above the 21 EMA and just rocket higher. But there was opportunity in the first 3 days after that gap, right? Uh, the market didn't gap and go right away. We had inside day ish, and even last Friday was kind of a digestion day. If you look at QQQE, we were down as well. So you kind of had 2 days on weakness and even 3 days on that open on Monday of this week to open new exposure into weakness after that gap. Uh, but now even QQQE is above uh, 2 times ETR from the 21 EMA. And like we discussed, QQQ is now at 3.15 ATR from the 21 EMA. So just recognize that fact that usually what you want to do is open new exposure into weakness when the price and the market, the cues, is getting inside the 21 DMA structure, around the 21 EMA, or at least if you have constructive action below 1 ATR from the 21 EMA. So I know I'm talking about that a lot today, yesterday, even the day before, uh, is just because that I want to make sure that nobody get hurts chasing that market. All right. That being said, all right. So if we take the four pillars that I go through each morning, and what are those four pillars, right? So the first one is price. So is price above a rising 21 DMA structure? Yes, it is. So it's risk on. Is it extended? Yes. So just cool off with new exposure. That's the only thing. Just take it slow. If maybe we have some rotation into other groups like quantums, like I don't know, space team that is trying to set up in some hardware computer like Dell, Hewlett Packard. Those kind of rotation can happen, but don't take the bulk of your new exposure when the market is that extended. All right, so that's the first pillar, price, and price is above a rising 21-day structure. The second pillar is breadth expanding. Are we in a breadth expansion regime? All right, so the McClellan summation is showing that the McClellan summation is rising above um, a rising 10 DMA. All right, so breadth is expanding and the McClellan summation is not overbought. So we have a lot of room. Let me bring all right, so McClellan summation in an uptrend above a rising 10 DMA. We're just coming off oversold. The McClellan summation is still at minus 82 standard deviation. 0.82, sorry. So bread expense. All right. So that's the second pillar. The third pillar, market internals. So we have very constructive action on the credit spreads. Inside day, still in a downtrend below a declining 21-day structure. The VIX new low yesterday, downtrend below a declining 21-day structure. And Bitcoin trying to establish a new trend, struggling a bit at the base top area. That's normal, but the trend trying to confirm. All right, we're still making higher lows above that rising 21-day structure. Tech is outperforming staples, so defensive sectors, and the rest just looks good. So that third pillar, internals, is looking risk on. And finally, what are the liquid leaders doing? And your own positions. All right, and I explained that a lot already in the last few days, but when those three first pillars are risk on, I tend to not give them so much weight. All right, I don't want to observe, overanalyze those three pillars as long as they remain above or below, depending the one, their 21 DMA structure. All right, you don't want to overthink every wiggle, ebbs and flows when they are in that trending state. All right, what you want to do though is focus on the liquid leaders. How are they trading? Are they putting climaxes? Is there still liquid leaders setting up? Is there liquid leaders that are extended in having non-LT price action? And so far what we see is LT action. So you look at SNDK pulling back a bit, it was extended. Light coming back on low volume, low ranges into the rising 21-day structure. SATS try to make a new high. BE normal digestion about following that EP and large move. AAOI small pullback digestion. Nebius new high. CN looking very constructive of the right side just above the 21-day structure. STX going sideways. Planet Labs building another higher low and undercut and rally right into the 21-day structure. TER, look how those names that did well last week on that gap went sideways, and yesterday there was weakness in those leaders, and look how they closed the day, super strong. Those dips are being bought. That's the feedback that you're trying to get looking at the leaders. MKSI, LRCX, same thing. Weakness yesterday got bought. But there's a lot of hard extension. All right, so there's stuff very, very extended like CRDO, AMD, CLS, Nebius. That's the stuff that you want to call off and maybe look at what's setting up. And what is setting up? Maybe optical, photonics. So you have light, you have cyan, you have, what's the other one? We talked about cyan, AOI. Maybe it will set up at that high with a bit of weakness around the 10, the 8 EMA. But that group cooled off since last week, and maybe that's a group that can take back the leadership. All right, but overall, that's the fourth pillar, right? Focus on your positions. Focus on the liquid leaders. Are they hacked? Are they healthy? Are they extended? Are they still setting up, etc., etc.? That will give you the feedback that you want. All right. So right now, that fourth pillar, the liquid leaders, and my own positions are looking good. All right. So price, breadth, internals, all risk on. My positions a bit extended, just like price on the Qs, by the way. Uh, so that's the picture that you get. Um, so unused this morning, GLW. I think there was a downgrade. So that's part of the game. Sometimes they have good news like BE, and you gap up 20%. Some days it's to the downside with a downgrade offering bad news, and they gap down. So part of the game. I have the cushion to see where it goes. It's still a leader. That group is trying to set up as well. So maybe buyers will come in, and I want to see how this closed today. So Christos is asking, speaking about those four pillars, would a fifth pillar be the LL composite, so the liquid leaders composite? No, that's the fourth. That's just another way to assess, and that's a good question. Uh, but personally, I like to go through that list myself because I'm used uh, to look at that price action. All right. And I want to get a feel of exactly the range, how they flag, how they pull back on lower, large volume, large range, or small range. I'm used to have that feeling. And each night, each morning, I go through that list, all right, to get that feel. But what you can do is using the TradersLab liquid leaders um, composite, all right? That's the same thing. So that's just another way to look and assess that fourth pillar. All right, you can look at this dashboard. So we have a breakout on the liquid leaders. They are a bit extended as well. That confirms what we see on the Qs, what we see in the top liquid leaders as names extended but flagging. Uh, and breadth is expanding. That's the same thing that we see. Uh, so that's just another way if you're not that used to look at many charts and like assess that kind of picture. That's that's taking everything together and spitting it out in a price chart, a breadth chart, and all those ratio that you're used to use in the TLMM dashboards. All right, so good questions, but I would say that it's a way to assess the fourth pillar itself, the liquid layers and your positions. And we could make the fourth pillar your position and the fifth pillar the liquid layers. And honestly, you can have 12 pillars or 25 pillars. Uh, but I just want to, and for me, that's super important to keep things simple. All right. I don't want to overcomplicate my system. I want to keep it plain stupid and simple. Uh, and I just prefer to, because I trade the liquid leaders anyway. I want to have fewest pillars and checklists possible, and just grab everything and make that fort, right? Um, so that's up to you. Maybe you want to make that the fifth. I prefer to keep it simple and have fewer possible. All right, so for the rest of my positions and the portfolio, I'm talking about those positions simply because I guess that some of you are in the same positions, right? So SAT's trying to break out. It was rejected at those highs yesterday. Um, all good if it handles. If it goes sideways a bit and try to push in the next few days, even if we create another higher low. So we are making higher low since mid-March, right? So we can still make another higher low, or go right away, or go sideways. Uh, but yeah, it's still looking good with that cup and handle look. Let's see if it can push now. B, super extended. That's okay. Let it fly, let it breathe, let it come in a bit. It will provide an entry at some point, but now the 21 EMA is super extended. Nebius just keeping making new highs. That will have to cool off at some point. TER, we discussed that. It went super tight. Shakeout yesterday was bought aggressively, so looking good. Micron inside day. Again, that's why I trim. We're right into that uh, base top area. So it's normal to see supply, see some selling around those big levels. VRT uh, looks like might start a pullback. All good. We're training the 21 DMA structure. So as long as we stay above, we let it breathe. It's normal. GV, same thing, starting to flag. GLW, same thing, starting to flag. There is a downgrade on this, so let's see how they buy that gap. Caterpillar, a bit more weakness yesterday, but still above that rising 21-day structure. And to be honest, a lot of those names are trying to build the right side of their cup and handle, right? So we have that cup, retested that previous high. Now it looks like they want to make that handle of the right side. So as long as they do it above the rising 21-day structure, that's super healthy. TPR flagging above the rising 21-day structure. Hard looks like it broke out of that flag. Tight action of the right side, super constructive. Kava, tight day, trying to emerge of the right side and break out as well. XYZ, fintech super strong yesterday. Robinhood was strong as well. Approaching my 2R, we're breaking out from that EP high reaction. So starting to try to build a new uptrend. That's super constructive. And finally, EBIT, we covered that in the market internals, but that's looking good. Trying to establish another higher low, struggling a bit in structure and supply from the recent swing highs, but that's normal. Let's see how they absorb that supply and trying to establish that new uptrend. All right, and finally, Focuslist, and that's the part that is tricky to talk about. Uh, the Qs are super extended at more than 3 times ATR from the 21 EMA. But at the same time, that move was largely driven by mega caps that really squeezed, right? So if you look at the mega caps, uh, look how they ran. AVGO straight up, Google straight up, Nvidia straight up. Amazon straight up. All right, so those are big moves, and they drive. They are the Qs is a weighted indices index, so that's normal to see that super extension on the Qs with the mega caps that drives that index being so extended and going straight up since that gap. Apple was looking very good on that reclaim and backtest. That's not in my focus, but that was a good long setup. Meta straight up as well. Tesla reclaim of the 21, the EMS structure. Lili trying to establish maybe some base, and Microsoft reclaim the 21 the EMS structure, and that's a beaten down stock. So look for a back test of the 21 day structure, but it's not leading far from it, but that's just good to observe. And my point was, if the Qs was driven by those large move, and we start to see some rotation out of mega caps, and that trend is really broad, and that money want to rotate into smaller stuff and broader tech and broader market, then you still have setups, and you can still have um, stuff working. And that's why it's hard, because I don't want you to get hurt while the Qs is super extended. So I want you to be aware that it's not the good spot to take up the bulk of your exposure. But at the same time, the market can continue in a lockout rally, and there's some rotation. All right. So in the last few days, even if the market was extended, you had some big move in quantums. Maybe the photonics and optical team is taking back leadership after a few days of pullback, and you get those new highs in AOI, in light, in CN, all looking constructive and cooling off. Uh, so it's okay if you want to stay engaged, uh, to maybe try a few position if the market is having some minor weakness and you have some good spots. But please just be aware that you don't want to take too much NAIR, so new exposure risk. Just control your exposure very well, and make sure that you have the cushion to hold those positions into an extended market. All right. Uh, so like I said, light is looking good on that pullback. ONS is one that I want to track. That was a big winner, big leader. Uh, Double bottom, building higher lows, trying to reclaim the 21 DMA structure. So I want to take that into a focus when the market is not extended. So maybe we have some reclaim right away, and I will look for the backtest. Planet Labs PL looking good with that inside, trying to establish a higher low in the rising 21 day structure. TPR, we discussed that already, going sideways, building higher lows on that backtest. Dell and Hewlett Packard, same group. Uh, Dell could be interesting in a shakeout at the 21 day structure. And HPE is looking good with a double inside into the rising 21 day structure. Rocket Lab, so space team, we discussed that as well. We have Planet Labs. Rocket Lab was a leader as well, trying to reclaim, and yesterday was a nice backtest. So that's another group that maybe you see rotation into. And even if the Qs is having some hard time keeping up with that extension and need to cool off a bit, then maybe money will rotate into those secondary groups trying to set up. So yeah, that's the hard part. Even if the market is super extended, don't rule out that some groups can have good traction, but On average, that will become harder and harder to get good momentum and good traction on your positions. That's that's the point that I try to hit home with you guys. All right, so I think that was it. We covered again the four pillars, and that's a new term, but just trying to bring that 4 point checklist to your attention, and that's kind of the checklist that I'm going through my head each morning before the market opens, right? So price action, QQQ, QQQE above a rising 21 day structure. Just keep in mind the short term extension once again. Breadth expanding, McClellan summation above a rising 10 DMA, not overbought, so we're all good there. A lot of runway. That's why I just want to be clear. That recent price strength is super healthy and constructive for maybe a larger move. Uh, Even if I'm talking a lot about that short term extension and to be careful, I want to be clear. There's something going on that could lead to a much bigger uptrend. So remain optimistic, right? Um, Internals, all risk on. Credit spreads, VIX, Bitcoin, all on the right side of their 21 day structure trend. And finally, positions and liquid leaders, all looking good, constructive. Some recent leaders are cooling off, providing maybe some nice entries. Others are super extended, need to flag, and others are just going sideways and digesting that move. That's the same thing that I see in my positions, and that's why in the last few days I didn't take any trades. I want to be patient with the exposure that I have and see where that trend goes. All right. I'm not in a rush to over trim. I'm not in a rush to take new exposure and be aggressive as well. That will happen only if we see the Qs, QQQE, coming back into rising 21 day structure. That's my system. That's where I want to engage and be more aggressive. I want to engage when there is fear, ideally, and not buy into that big market strength. All right. Am I looking to get a Bitcoin position? Actually, I already have a Bitcoin position. Look in my portfolio. I have a EBIT ETF. So I took position in IBIT last week. I don't remember exactly. I think I took on the back test of the 21 day structure or a bit before. I'm not sure. Let me check. What was the date? I bit so the 47. Oh, so I took on the higher low. All right. And I think that Bitcoin itself was reclaiming the 21 EMA. Yeah, okay. So EBIT, the ETF is lacking price action. So I took right here, right? So we had that reclaim-ish back test, and I took on the reclaim of the now rising 21 EMA. So I think that was a pretty good entry. Um, and then we're building higher lows since then. So my criteria to get on margin, yeah, I want to have year to date good performance. All right, good cushion, and I'm not there yet. I'm nearly back to flat for the year. Uh, so I want to have that good performance. All right. Uh, Second, I want to have good cushion in my portfolio. All right, that I have. All right, that I have, and I want price. So I want wait, I want the market cycle to be early. All right, I don't want to be late stage. So that McClellan summation need not to be overbought, right? So I don't want to get on margin when we are late stage, all right? When that trend is too mature. And I want to have a good spot, risk reward spot. So I want to see price coming in, the rising 21-day mid structure on the Qs, on QQQE, and not again not be late stage. So if I can have all those conditions, good year-to-date performance, good portfolio cushion, not be late stage, and price at a good risk reward area close to the 21 EMA, then it's time to hit it hard on margin. All right, guys. So I think this is it. Uh, Again, if you have exposure, be patient. All right, don't be shaken out with normal and healthy ebbs and flows in an uptrend. All right, your position will pull back. They will shake out. If your names are 6, 7, 8% ATR, well, if they are extended and they pull back 8% on a day, well, guess what? It's a normal move. All right, it's only one ATR move, so it's normal. Um, and if you don't have the exposure that you want, then look for the names that are setting up, still leader but cooled off, like opticals. Uh, that kind of group, leader group that might see some rotation back into. Um, but don't go crazy on new exposure risk because the market is short term extended. All right. So, do I want to re engage in Duck N? So, no. First, while software proved to be a dog, yes, they are oversold, they might bounce, but they also prove not to have big leadership last week. Um, I tried both of those leaders. I tried Dockin, I tried Fastly, and even Net, but all in software, all in lagging groups. And what was the feedback? Very bad. All right. So I won't argue with price. And right now, price is below a declining 21-day mid structure. Same thing for Fastly. So can we have 1 or 2 day of counter trend move? Yeah, sure. But we remain below a declining 21-day mid structure. All right. And I don't want to engage below a declining 21-day mid structure. All right, next question. How do you assess to fear to re-engage as market is in euphoric phase now? Sorry, I don't understand. How do you assess the fear to re-engage? Do you mean that you have the fear to re-engage, or I'm waiting for the fear to re-engage? I just want to understand the question properly. And like I said, I don't think it's a good idea to engage here. Uh, I would really wait for the cues to come back into at least one ATR from the 21 EMA. Ah, okay. You mentioned that you try to buy when there is fear. All right. So yeah, fear is, and you will feel it when everything is down, one or two ATR, uh, that the Qs is pulling back into the 21 DMA structure. Uh, there will be fear. Everyone will probably say on their feet that uh, that trend is done. We had a failed breakout on the indices, failed new all-time high. That this was a counter-trend rally, and you see the picture. The sentiment will get very bad very quickly. That's fear. Um, but how to measure it essentially is you will get price to pull back into a rising intermediate term moving average like the 21 EMA. What needs to happen now? Yeah, that's what I'm saying. You need to see price come back into support, come back into structure. All right? You need to see negative breadth. You need to see the leaders pulling back into their rising 21 EMA structure as well. All right, there's no fear now. You need that to happen. You need to see price to cool off. All right, and right now that's the game to wait. All right, uh, I had very strong momentum in the last few days. All right, but now look what the pre-market is looking. So you have Nasdaq still 1.2% higher this morning before the open. Small caps really struggling. All right, they are extended as well, but really struggling right into that all-time high base structure. All right, and what do I get in my portfolio and the leaders? Like mixed action. All right, and that was the same thing yesterday. I closed nearly flat. I think I was down like 0.4%. And that's what you get as the market gets extended. Mixed action. Win rate on your new trades go way lower. You get chopped. You don't get momentum usually out of those setups because the market is extended. There's no more momentum. The momentum is behind. So momentum will come when the market digested that first leg up. And how it will do that is probably with mixed action in the liquid leaders for multiple days, where you will have one or a couple names working great, but mixed action and some breakdown in others. That's the action that you see when the market is extended. All right, uh, and that's a great example with just looking at my portfolio this morning. There's some stuff in new exposure that is green working, stuff that is not that extended, or stuff that pulled back a bit already yesterday. But there's other things that is extended that just need to cool off and is red this morning. So you will have that battle of stocks not that extended that might still grind higher, and stuff that is extended that will shake out and create that mixed action, and your portfolio to grind higher once the initial momentum is behind. All right, guys. So that was the session. If you have other questions, don't hesitate to use the Q&A channel. Um, I will be in the trading pit as well today. I will be in office. So don't hesitate to ask questions. Um, I don't plan to be too active though, just like in the last few days. I'm trying to be really patient with my exposure, really patient not to engage in a short-term extended market as well. And I plan to continue in that vision as well today and probably in the next few days as we close the week. All right. So thanks to you guys. Have a good day. Remain optimistic. Don't feel FOMO. Again, I know it sucks that the market is already extended, but wait for your spot, wait for your pitch. You will be happy to have that patience down the road because if we are making a new all-time high, that's probably because we are starting a much bigger move if it sticks, right? So just remain optimistic, remain new of that fact, and that will bring you patience to execute at the proper uh, short-term spot. All right. Have a good day. Cheers. Bye bye, everyone.